Good morning, everybody. Hope everyone's doing well as we get into the game plan here on this Tuesday morning. So yesterday we saw volume that was pretty light. Overall, markets were down fractionally on the day. We still saw big technology stocks leading the way. And again, this is incredible. We're seeing a bigger and bigger weighting in the S&P 500, in the NASDAQ, that honestly should freak out most investors. Now, most investors are making money because big caps are going up, these mega caps, these magnificent seven. But remember, it works both ways. If something goes wrong with those big players, it's going to take the markets down. Let's get into some chart action. Now, I have this chart of Tesla up. I figure we'll start right with Tesla. We'll get into some market action. I also have some other interesting factors to show you. But number one, if we take a look at Tesla, look at how you had this wedge pattern. You broke lower, but notice how you haven't gone back up to retrace to what we would consider the scene of the crime. And the scene of the crime, again, is basically retracing up into this level, right? Back to these areas here. Instead, you've stalled out right here. Now, most investors would say, well, you know, that's weird. Why isn't it hitting the retrace to the scene of the crime? Number one, I think eventually it will. But number two, if you look closely, look at what you had here, right? There was a gap right from here down to here. Notice where price stalled out. There's something called a gap fill. When you create a gap, when price gets back to that level, there tends to be selling pressure that keeps price from really breaking above in the near term. Doesn't mean overall it's not going to eventually go, but it stalls there. And what we could see here is if we draw a trend line right across here, we basically see that price rallied back, filled the gap, and is chopping sideways. Now, interestingly enough, what does this tell us in the short term? It tells us that it's consolidating in a sideways manner after a move up. What type of pattern formation is this? Right? That's the type of pattern. That's called a bull flag, or in spirit of bull flag. Ultimately, what does that signal? It probably does signal we're headed back into this area, into the retrace to the scene of the crime. So again, that was the first chart I wanted to show you as an educational piece to kind of go over the little nuances of how to read charts to understand, yes, there's a scene of the crime. It eventually likely gets there, but you have to look at the chart to see why is it stalling where it is stalling. And this is a great example on the Tesla chart. Now, having said that, let's take it one step further. We've gone to our micro point of time frame, right? Very short term. Then just a little bit further out is the move up. And then what about the big picture? Well, if we zoom out and let's go to the weekly chart, the big picture to me continues to be clear. What the big picture is showing us is that we've had this bounce from the bigger down move. We've now broken below support on the weekly chart. So even if this tends to go up here, eventually it likely is heading there. And again, as a technician, you have to understand that price and price action should be broken up into time frames. Are you looking at just the next few days? Are you looking at the next couple weeks? Are you looking at the next couple months or the next couple years? And the determining factor for that is what time frame are you analyzing? All right, so daily is going to be over the next couple days to next couple weeks. If you're looking out the next couple months, you probably want to be on the weekly chart. If you're looking at the next couple years, analyze the charts on a monthly basis. Okay. So that was the first chart and the first little analysis point I want to do, or I wanted to do. I do want to take you over here, guys. So what I want to show you is this. And again, this is kind of just a background for me to talk about something here. But basically, we got home sales data yesterday at 10 a.m. Eastern time. And I continue to warn you that while the economy is staying strong for now, right, and we've seen jobs and unemployment stay relatively good, there are cracks emerging, whether you want to call it cracks in the glass, cracks in the ice, whatever you want to call it. There are more and more of these emerging. Behind me, I have new home sales, right? And new home sales year over year, prices have now fallen 18%. Okay, so again, this is just the tip of the iceberg. But again, it is a crack in the overall bull case that we're not going to have any sort of landing. It's going to be no landing or maybe a soft landing. Again, home sales year over year, new home sales, 18% decline. Another crack that I want to bring to your attention here, guys, if we take a look at this, and this is, again, you can see behind me, luxury watches. So luxury watches, from the 2022 highs, we have seen luxury watch prices drop 37%. Okay, so it's another bubble, right? We've seen NFTs collapse. We've seen crypto collapse since those highs. We're getting this bull market, micro altcoin bull market, Bitcoin off its lows. But honestly, if you look back at 2021, altcoin prices are down 90% from their highs in general. So you're seeing more and more of the bubbles collapse. The biggest bubble you have is probably in debt, which is the US debt. It is nearing 34 trillion. You also have the Magnificent Seven. And I do think that I want to warn us again that at some point, stocks like Apple, right? At some point, Apple is going to have come back to a kind of, I would call it a realistic price to earnings ratio. Now, many of you out there watching this are probably younger than me. I turned 43 actually just about a week ago. But the point is this, is that in history, the PE ratio for a mega cap play, and this even goes back to the early 2000s after the dot-com bubble, was approximately 10 to 15. In a bear market, it was more towards the 10 ratio. Bull market, maybe closer to 20. Apple, Nvidia, Microsoft, all of these mega caps are trading around the 30 PE ratio level. And again, it's justified because it's where everyone wants to be. But it's only where everyone wants to be while the economy is good. With the cracks emerging, as things continue to unravel, and they will continue to unravel, be careful. Because again, the stocks that lead the market up, and we've seen this in the Russell chart, right? The Russell hasn't really led the market because it's 2,000 stocks, not including the mega cap. But again, that has stalled, but ultimately the mega caps have led the S&P and the NASDAQ higher. Now, speaking of that, I do want to quickly touch on the Russell chart because there is a potential opportunity here. All right, so on a short-term basis, you're starting to create a bullish flag pattern right here, right? Up move here. And what we're seeing here is there's a bigger channel or bigger wedge pattern to move go in the Russell. And the answer is it could go at least as high to this trend line right here. So again, if we go back to the daily chart from the weekly and we notice that we have a bullish consolidation pattern here developing, what does it possibly tell us could happen? It could be telling us that we're headed to this level right here, right? Which is right around 188. Currently, we're at 187 and change. So there's about $10 of potential. And I say potential because it's all about probabilities, right, guys? You guys know this. If you've been following me by now, you know that everything I do, there's no hard 100% trades. There's no such thing as a guarantee. It's all based on probabilities. In general, I look for 70 to 80% success rate trades. That's really as high as you're going to get. You know, maybe you can get lucky and hit a little bit higher percentage. In crypto, I've been doing that because I've been so meticulous in my trade alerts there. But ultimately, again, probability is probably about 70% chance that we could make a move up here. Now, the bigger question is, does the big cap tech start to pull back if the smaller stocks start to, rally to the upside? Now, another question that would be good to ask is, well, what would be a catalyst for why the Russell would move up? Why would the smaller stocks move up? Why have they bounced like this? And the answer is simple. It's interest rates. So the smaller stocks, and if we go over to the 10-year yield, look at the 10-year yield dropping, and then we flip back to the Russell, and it's inverse, right? We see this move to the upside as yields are dropping or as interest rates are dropping. Remember that small cap, mid cap, even some large cap companies, they basically have to borrow money. I always say to people, especially traders, is that there's a reason why a stock is a small company. It's because it's probably not massively profitable yet. And therefore, you have to understand that these are the companies in the Russell that have to borrow money. They have to take out loans. And ultimately, the higher interest rates go, the chance of survival of small stocks or small companies diminishes substantially. So when yields and interest rates essentially start to drop, it makes sense that that's a good thing because then they can borrow money at cheaper levels and it could drive the Russell up. Now, again, I've said this very clearly. Ultimately, I still think the Russell's going to collapse down the road, but it doesn't mean that we can't see short-term upside in the chart potentially into that 188 level. Okay. Couple other charts I want to go over real quick. The KRE is the regional banking ETF. I do think there's an opportunity here as well for a little bit of additional upside. This would also coincide with the same idea as the Russell. You have the bullish move right here, right? This is a little bit of a bullish pattern. You should expect it to move to the upside. And again, the symbol is KRE. That's the ETF that tracks the regional banks. Now, in terms of a target, the target to me is relatively clear here. And the beauty of this is we can look at history and get it to guide us. And basically what I would do here is take a trend line right from this area, right? So look at what we have here. We have a very defining trend line that marks off this area here, right? We were hitting it over and over again. Price was hitting it and continuing, and then we collapsed, right? So you were hitting it, it was resistance. We then fell, we then rallied up, we kind of pulled back there, and we broke out. Then it came into support, bounced up, support, bounced up, support, bounced up, and finally broke down. Now, where do you think the logical target would be on this chart if it were to go up? Where would it run into significant resistance? And the answer is, right, pretty simple. You would assume that if it gets back to that point, just like history has shown us, and this is what technical trading is. It's looking at history, looking at pattern formations historically, and letting it guide you to a high probability level. So the idea is if we get back to here, that would probably be your stopping point. Now, that's a pretty good move on the KRE. And in order for the KRE to go there, you would need to see interest rates fall. All right. Couple other charts I wanted to just briefly go over here with you guys. AMD, check it out. AMD again. AMD, just like a lot of the tech stocks, are at pivotal levels, guys. I showed you Microsoft at a pivotal level. Meta's at a pivotal level. Nvidia's at a pivotal level. I mean, even the QQQ's at a pivotal level. So it makes sense that when we look at this chart of AMD, it is also at a pivotal level. Pivot high. Connected to the pivot high. Where is current price? Right at that level. So again, to me, what this tells me is that the markets are literally at a crossroads here. Okay, and which way ultimately do they go? We're gonna find out. Do we get a breakout in all of these charts in these tech names? And do we surge to the upside? Does the NASDAQ 100 approach its all-time highs? Or do we stall out at these pivotal levels and pull back? And that's what I will be guiding you guys on in the future. Right now, and this is very, very important, guys, always respect resistance or support until it is broken. So one of the biggest errors investors and traders make, and this is psychological, is that investors and traders oftentimes assume. You don't want to assume. You have to go with data. And while you have gone here, you haven't broken it yet. So you cannot assume the breakout while it is still at or below the line. Once it gets above, we can use confirmation, which I teach in my courses. There are things like that that obviously help us guide to whether it's a real breakout or a fake out. But that was a good chart there. Another chart moving this morning. Pinduoduo is a Chinese company, and they had blockbuster earnings. The stock pre-market is trading substantially higher. Look at this. So basically going into the day, we were trading at about $117. We're at $135 now. Now, the reason I bring this to your attention is if we flip over, look at the beauty and the symmetry of the chart. What we can see here, let me see if I can zoom in a little bit here. So basically what we can see is we have a pivot low here. Let me just jump over here so you can see it. So this low going back to 2022, right? This low right here, this low here, right? We have 3 points to connect. We draw a parallel up to the highest pivot point right here, right there. And ultimately, if you essentially extend it out, let me do that right now, okay? And let's do that here. If we bring this down, what do we get? Where is current price? Right here is where current price is trading. So amazingly, this channel, which I just drew on this morning just before I got into this broadcast, it literally tells us, wow, if Pinduoduo were to go up, where would be a likely target? And the answer would be 135. Now, it'd be interesting to see today if 135 is a resistance level or if it's just a stopping point. I personally won't be shorting it at 135. These China stocks, they have been beaten down for a long period of time. I will say this, though. If we look for a synergy of levels, there's a secondary level right here, right, where we have pivot points here through here and right through here, and that's right around 136. So again, per the chart does tell us around 135, 136, you should be resistance. But again, I would caution on earnings with a Chinese stock. It just makes it very tricky to know whether or not that will really be a safe shortable level on Pinduoduo. Like I said, it's not something I'm looking to do. All right, let's jump to the center screen here real quick. I want to take a 15-second break just to thank iTrust Capital. Take it away, guys. All right, guys, we're back here. We are back, as I said, a couple things, a little bit of a hiccup there, but no big deal. Let's get right back into the charts, all right, guys? So over on this chart, I want to just quickly touch base on Bitcoin, right? So Bitcoin, no real change from yesterday. Yesterday, we saw some selling pressure. Today, we're getting a little bit of a bounce. Now, the kicker here is that we're still stuck within this range. And again, I went over this yesterday. If you need the kind of the technicals of understanding the range, you guys can absolutely do that. But ultimately, we're stuck within this channel. And as a technician, all I want to do is just follow this channel and ultimately decide or look to see, does it break this area here or does it break here? Now, remember, yesterday we talked about by December 18th, Bitcoin will be forced out of this channel. So it could happen as early as tomorrow for all I care. You know, it doesn't matter. All I know is that by December 18th, it has to have broken out or broken down. One or the other. So you're basically looking at 3 weeks is the longest period before we get a breakout or breakdown. A couple other charts to go over here. Gold, I always touch on gold because, again, it is a rock star right now. Look at the powering higher on gold here. Gold, again, ripping higher today. We're now at $2,024 on gold. And you guys know I've been pounding the table. Do you guys remember, by the way, in this very broadcast, in this game plan, when we were down here, and I still remember this vividly, there was this big sell-off in gold where we flushed basically from 19, basically it was a $100 drop in the course of 9 days down in a row, I believe it was. And right down here, everyone was freaking out. Oh my God, is the gold trade not going to work out? Is it gold over? Is it going to be this? Bitcoin is looking better. Maybe that's the play. And it's like, no, look at the channel, the beauty of channels. And I show you guys channels almost every day. In fact, on Pinduoduo, we just looked at that. But look at the beauty of the channel, how you had that area to this area, to this area, to this area, and then the pivot low just perfectly aligned. And that was your buy price. And I actually picked up physical metal when it was right down here. And so far, so good, obviously, as price continues to rally to the upside. Now, again, we know our target, right? Our target into year end is this level at 2080, 2075, the all-time high. We also know that based on the hit methodology that I taught in yesterday's game plan, that once we get to 4 hits, which would be this next hit, the probabilities for a breakout start to increase dramatically. In other words, by the 4th hit, you're at about a 65 to 70% chance of a breakout. By the 5th hit, if it doesn't do it on the 4th, by the 5th hit, you're at about a 75 to 85% of chance of a breakout. So essentially what I would say between the 4th and the 5th hit, and this, if we go up here, this will be the 4th hit, you would be expecting a breakout on gold. So I continue to think gold is the play, and I've said this so many times in the game plan, but basically remember, the central banks have been buying gold hand over fist. They're the ones that print the money. If they're buying it, they probably are doing it for a reason, right? They probably know that the ultimate outcome of all the debt in the world, all the central bank debt, the government debt, all this stuff, is more printing of money. And they are basically preparing their balance sheets for that by buying physical metal. It is what it is, guys. I don't like it, but it is what it is. It's not my, ultimately, unfortunately, I don't have the power to change anything. All I can do is have my positions in gold as well, take note of that, and let you guys obviously know as well. All right, silver. Silver continuing to be a rock star as well. Silver again has broken out. Let me just zoom in a little bit here. So right now we're looking at silver's chart, and silver again should be expected to go up a little bit higher to that $25 level. Remember, just above $25, right? Well, it's a little bit higher right there. But in either case, you're looking at just a little bit of upside before you hit resistance on silver. I did want to touch on Ethereum today. I haven't touched on Ethereum, but I do think Ethereum still has a little bit more upside potentially here. There's another channel. So you guys know, channels, by the way, will change your life when you start using them in trading. But channels ultimately, take a look at this, right? You basically have pivot high, pivot low, right over here. And again, is that a bullish consolidation pattern? Let me show you here. And the answer is probably as close as we can get. That probably means one more move up to about 2,300. I could see this going maybe as high as 25, but ultimately at that point, I think there's a good chance we could even come back down afterwards. After the spot ETF for Bitcoin's approved, you could actually come all the way back down into there. All right. Oil today, OPEC again having struggles. I'm reading that OPEC Plus, a lot of the members, Saudi Arabia wants to cut production, but a lot of the members won't agree to it, so it's a whole fiasco. That ultimately is just keeping oil pretty much flat here. It's almost like oil knew going into this that was going to be problematic, and we can see right here, oil is just chopping here just above this level. I still have a target price of around that $68 level on spot crude. All right, guys, enough said here. You guys are rock stars as always. Thank you for tuning in so much to the game plan and spending just a little bit of time, 22 minutes with me every single morning. I hope I'm giving you guys some alpha to go off of and some knowledge, because listen, knowledge is everything in this game. Remember, the institutions have technology, and they have the most expensive traders and the most, basically the most assets at their disposal. The only thing you have, you're not going to compete on money. I'm not even going to compete on money. That's not a question. What we can do is we can learn the game. We can learn charts. And that is the ultimate key, to learn the game, learn probabilities, and then let it all take hold. And there is money to be made for each and every one of you in the markets if you use the charts. Have a great rest of your day. Thanks for tuning into the game plan.